As powerful as cost volume profit analysis is for facilitating decisions, it does have its share of limitations. One comes from the fact that it relies heavily on estimates. As you saw in the previous examples, if your selling price, variable costs, or fixed costs are off, then so will the results of the analysis, and the break-even point that you calculate will not be valid. Of course, the world may change on you as well. It may be that a new competitor enters into the market and what you originally thought your selling price was going to be needs to change in response. Costs may not be the same across a long period of time, and so the analysis that you run at the beginning of the year may not actually apply to the world as it looks at the end of the year. And of course, CVP analysis involves a series of different assumptions, and that's the point where the biggest limitations come from. So let's talk about those. For our purposes, we'll focus on three key assumptions of cost volume profit analysis. The first is that we assume that costs can be categorized as fixed or variable. And if we have a mixed cost, it can be broken down appropriately. You see that in our equation where our fixed costs reside in the numerator and variable costs reside in the denominator. Another assumption is that everything is linear. The selling price doesn't change over different ranges of volume being produced and sold. The variable cost per unit remains the same, at least on average, across the different range of production volume. And the total fixed costs stay relatively constant over the period of time that you've identified. To the extent that any of these things is nonlinear or changes over a range of production and sales volume, then the validity of the analysis is in question. And finally, when we're talking about manufactured or retail goods, that our product is a physical good, what we're assuming there is that inventory is not changing drastically. That is, the number of units that you have at the beginning of an accounting period is roughly the same as the number of units that you have at the end of the accounting period. Let's have a checkpoint just to make sure that we're all on the same page.